I'm Sarah Borkson-Keto, here in New York for REIT Week 2017, NAREIT's Investor Forum. I'm joined today by Arlen Nordhagen, President, Chairman and CEO of National Storage Affiliates. Welcome, Arlen.
Thank you, Sarah.
So when we last spoke in November, you talked about the ongoing strength of the self-storage sector. How are you feeling today about fundamentals in the sector?
You know, overall, I'm still feeling generally positive. We've definitely continued to see some slowdown in the growth rate in the sector, but we're still running about 10% ahead of our historical averages in terms of our revenue growth, same-store NOI growth. The 25-year average is about 4% revenue growth per year and 5% NOI growth per year. And last quarter, we saw the overall sector running about 10% ahead of both of those numbers. And for us at NSA, we're running about 50% ahead of those numbers. So we're doing very well right now, and we continue to see very strong demand.
So what about the growth prospects specifically for NSA?
We still are seeing good growth prospects. Last year was a year of incredible growth for us, so we're certainly not seeing that strong a growth as last year. But our target is to grow our portfolio asset base by between 7 and 15% this year. And we feel very strongly that we can achieve those numbers. That would be between $200 and $500 million of additional assets. And we definitely see that we'll hit the low end of that range. We think there's a good chance on the higher end as well, but it does depend on which of the growth avenues come through for us. We have a strong captive pipeline, and that delivers the base growth for us with the properties that our existing pros already have and are managing to contribute. Then beyond that, it's how much do we get in terms of third-party acquisitions? Do we add any new pros, or do we add any joint venture type investments? And those would be the things that would move us up from $200 million to the $500 million level. So I'm hopeful that we'll end up at least in the midpoint of that range.
So right now we're seeing various REIT sectors undergoing quite significant changes, shifts in trends, such as online retailing. Are there any specific trends that you're anticipating for the self-storage sector?
That's a difficult question to answer. I think as far as our concern, we're more focused on sort of some of the midterm concerns, if you will. The big question that's out there for us is, how long will we see this continued performance above the historical averages? As I mentioned, the historical averages of 4% revenue growth and 5% NOI growth, we've been running above those numbers for almost 5 years now. And if we look back at the time period from 1997 to 2008 in our industry, when we saw significantly more overbuilding in the industry, we did see a slowdown from those levels. In fact, during that 10-year period, the average revenue and NOI growth was about 1% per year slower. So we didn't see any negative trends as far as declining NOI or declining revenue, but we did see about 1% slower revenue and NOI growth during that time period, driven by the excess building. And so for us, it's trying to adjust and figure out, will we see excess building, and to what level, and how much will that cause the slowdown? Will we go below the historical averages, or can we stay right at about the historical averages? Because we definitely see the trend coming down to be in those historical average numbers.
All right, well, thank you very much, Arlen.
Thank you, Sarah. Appreciate it.
And for more news and information on REIT Week 2017, be sure to visit REIT.com.